The old saying says, as January goes, so goes the year, at least as far as it's related to the stock market. And this year, January turned out pretty good, if I do say so myself, and got some exciting stuff to report. So here we go for a market update for this coming Monday, February 6th, 2023. Let's go. And hello, everybody. It's Jeremy Whaley here from Trade Maestro. I hope you guys are all doing fantastic today. I'm recording this on Friday evening after the market has closed in preparation for a new week of trading coming up on February 6th. So this is a February 6th market update. We got lots of update on here. January turned out to be pretty decent, and we've got some really strong signs of buying behavior, a lot of bullish signals, a lot, especially in the area of technology in the tech stocks. However, we ended the week a little bit questionable. So we're going to look at all that in this update. If you haven't checked things out over at trademaestro.com, be sure to check things out over there. And of course, like and subscribe wherever you're watching this. And I want to welcome our new community over on Facebook. We're building a brand new Facebook group over there. So check us out over on Facebook and be sure to join our page as well as the group. Just search for Trade Maestro, or you can just type in our page, which is I am a Trade Maestro. All right, let's get over here and take a look at the market and see what all is going on. What you're looking at right here is the Dow Jones Industrial Average with all my lines and all my markups, and it's not moving. There we go. It's finally moving here. I'm going to zoom in a little bit here, and I'm going to kind of spoil it because I want to keep things moving pretty fast here. We've got a chart pattern that's been forming here on the Dow Jones Industrial Average. It's right there. There's your triangle. Triangles typically represent a measured move. So you can see that first iteration of the triangle, and if I just draw a line right there, that's the wave that we're going to be measuring. It's roughly 34,500 on the top end here, and if you come down to the bottom, it's about 37.2. So roughly, 1,750 to 2,000 points is what we're looking at on the breakout. So if it breaks out to the upside, that's what you're looking at. If it breaks to the downside, that's what you're looking at. And being a symmetrical triangle, you don't really have a choice. You have no idea which direction it's going to go. So we're just going to have to wait and see which direction things go. But I find it interesting if we think about a breakout roughly around 34,004, 34.5, 2,000 points above that puts us right here. Well, you say, well, that's above our resistance. No, it's not. That just happens to be our purple line that we've got right there. But our all-time high is where? Right there, right smack in the middle of it. So I find that really fascinating that the measured move from this triangle that I just drew for you here, measured move to the upside there, puts you smack dab at the all-time high. So that's pretty interesting. On the downside, let's say we break out to the downside. Let's say we had that breakout around maybe 33.2. That would put you down here about 31.2. There's not really a major support. There's one right here. That could be the bottom. But my belief is if it breaks to the downside, I think the odds are that if it breaks that direction, we're going to have substantially larger bearish moves. Now, let's talk about that picture here. As you come back to your chart here, the interesting thing about the Dow Jones, for the most part, is we're really pounding into this resistance right here. I say for the most part because we did have this outlier that did start to create kind of that descending resistance line that started to form this triangle pattern here. But that is the same pivot that we've had back here, 34,400. And that has been a very, very major resistance for the Dow. So we're really looking to see that break out one direction or the other here. I would have, up until this past week and a half or so, I would have said, I think it's probably going to break to the downside because we're getting a lot of resistance there. And up until last week, really, up until then, the S&P and the NASDAQ were still holding in their bearish momentum. However, all that has really changed. So let's get over there and let's take a look at the S&P. We'll start there. For the first time in a year, let's zoom in here. We have a break of the bearish trend. So if you can see the trend over here, starting at the beginning of 2022, and 1, 2, 3, 4, we had a fifth hit, and wow, look at that. In fact, Sunday night, my profit picks, I talked about this extensively, and I said, finally, for the first time in a year, we actually have real buying signals happening on the S&P. We had a lot of bullish trades set up for this week as well. So it's interesting. We're back above the moving averages. Averages are separating the right way, and we're starting to blow through some resistance levels. This actually could be the bottom, or it could have been already. We may have already passed it. From a reversal definition, and I've said this if you followed my updates for the last year, I've said this all along. See if we can get my pen working. There we go. We've got a high, we've got a higher low, and now we've got a higher high. And so that is by definition a reversal. We're back above the averages. Everything's looking really good here. Now, I do understand we were back above the averages here, and we were above the averages here, but we were still below the trend line. And the difference, the distinction you got right now is we broke that trend line. And we broke it with gusto. We have great volume behind it. Everything about it is really strong. Now, you say, well, is there anything to slow this momentum down? The answer is, yep, there is. You say, what could it be? I got two things that can slow us down besides the Federal Reserve. Just kidding. Although, not really kidding, but kind of kidding. The first thing to slow us down is we are overbought. We've been overbought on your stochastics here for about 4 weeks. Maybe not that long, maybe 3 weeks. But the key here is we're overbought, and that in and of itself is not a problem. In fact, I always tell people at the beginning of your new bullish trend, you kind of want to see your stochastics overbought. That's going to happen. So don't be surprised when you see your Stokes overbought at the beginning of the bullish trend. That part is natural. How long it can stay there, that's the part that anywhere from here to about 10 to 12 weeks really is about as long as you're going to see it. So I've definitely seen a bacoodles of these. Is that a word? We see plenty of these where, you're overbought for a week or two and it turns down. But just because it's overbought doesn't mean that in and of itself is a bearish signal. If you zoom in here on the actual candlesticks and where they're occurring the last couple of trading sessions here, which I'm going to try to do for us here, you see some interesting trading behavior. Let me really resize that. There we go. And that trading behavior yesterday being Thursday's trading session, was a gap up, small spinning top candlestick. And then today on Friday, we ended with this little doji candle, which is normally, I don't even know if you can see that. I got two screens here. On the big screen, I can see it. On the little screen, I can't. It looks about like that right there. This doji candlestick, there's two things that are concerning about it. Number one, dojis very often are the beginning of, I'll write this up here, it's D-O-J-I. Very often they are the beginning of the turn, okay? So that's the first thing, is you got the doji in here. The second thing is a long upper shadow, or wick as a lot of people refer to it. It's not the technical term, but look, I don't care. I don't care what you call it. You can call it that long sticky thing on top. I don't care what you call it. But that long upper shadow with this doji creates what we call a tombstone doji. Is that tombstone? Is that the music? I forgot. Anyway, so that is actually a bearish signal. So you say, well, where should this thing go from there? Well, the most natural thing, regardless of your personal bias, the most natural thing is to see this move back down to this pivot area right here, which is going to coincide with our moving averages that you see coming up, and also this pivot support area right around 4,075. So that's really the most natural thing that we should probably see happen next week as we move into the week. It also will help this situation with your stochastics. So you'll see your Stokes come back into the kind of middle territory. And then we land right back where we don't want to be, which is the unknown, which is, hey, could this bear market be sustaining some more? Up until last week, I've been very bearish, and I've just said, yeah, I mean, we didn't have any good reasons to be bullish. This is actually a good reason to be bullish, but in the short term, I think you're going to see a pretty decent-sized pullback. So that's the signal that we're getting there from the S&P. Now let's flip over. Let's take a look at the NASDAQ, and whoa, this is a real story right here, folks. I got to rescale this whole thing. Get this thing rescaled so we can see it all. In the case of the NASDAQ, same thing, kind of. We had, starting at the end of 2021, beginning of 2022, 1, 2, 3, 4, 5, 6 touches on that bearish trend line, and it had really, really been I mean, adhering to it strongly. Every time we got there, we reversed until about the last week and a half. And look at that. We broke out above that bearish trend line with gusto. And you think, okay, well, we broke above the trend line. We got all those other resistance lines. Yeah, until Thursday when we just destroyed it. I mean, look at the momentum that we had, just gapping above and trading extremely bullish. And so you would think we would maybe have some good follow through. And then, wow, look at Friday's candlestick here. Little shooting stars, what that's called, with a very long upper shadow. Now, what's the importance of that long upper shadow? Here's the deal, folks. In order for a candlestick to look like this right here, what had to happen? Well, at some point, to create that upper shadow right there, at some point, it had to be a very bullish candle that looked like that. And then the bears came back, drove it down, and you end up with this kind of small spinning top candlestick. So what that upper shadow actually shows, a lot of people think that's bullish, but no, it's quite the contrary. When you see an upper shadow like that, what you've actually got is you've got a selling signal. That's a sign of a lot of bearish pressure coming in. So once again, very similar on the NASDAQ is what I'm saying on the S&P. I think there's a good chance that moving into next week, we could see some selling pressure come in. We are overbought here on the NASDAQ as well, the same way that we are on the S&P. So I think both of these have a definite setup. Both of them are giving bullish signals. I mean, I'll just flat out tell you, both of them are giving bullish signals. But we definitely have a setup for a pullback as we get into this coming week. Now, that brings us back to our conversation about the Dow Jones Industrial Average, which we're going to touch on right here. So as you look at the Dow now, you ask the question, well, which way is this triangle going to break? Is it most likely to break to the upside, or is it most likely to break to the downside? And the answer is yes. It's a symmetrical triangle. Okay, so the first thing to understand is absolutely a symmetrical triangle. Symmetrical triangles, 50-50. You can go either direction on the breakout. So that's the first thing to understand there. Now, do the other two indices, the NASDAQ and the S&P, do they give us any insight what we can expect from the Dow? I think it actually does suggest that the whole market probably has about a week of kind of light selling. It could be intense selling. I don't know. But my hunch is probably be a little bit of a light sell. And then if the NASDAQ and the S&P can get really firing on all cylinders here, what you're going to see is you'll see the Dow too. And that's when we could really see the breakout here. So, yeah, kind of, it was almost, I thought we were going to get into this weekend. I thought we were going to be like, okay, guys, we're here. We're bullish. I thought we were going to be there. And instead it's like, yeah, we're bullish-ish. We're kind of bullish. But we still got maybe some selling to shake out here. And that's natural, folks. Anytime you have a reversal of the market, it's natural to have those kind of things. So hope this has been helpful for you. Be sure to like and subscribe wherever it is that you're watching. And, of course, again, welcome to our new followers over on Facebook. And if you're on Facebook, go join our group over there. Go join the page and go join the group. If you're here on YouTube or anywhere else, like and subscribe, whatever it is that you need to do so you can get all the notifications. And, of course, go over to TradeMaestro.com and get subscribed to our mailing list over there. All right, folks, thanks for watching. Thanks for being here. And until next time, happy trading to all of you. We'll talk to you soon.